What's up everybody, Tom here with another video. In today's video, we'll be talking about why this chart support is the most important to be looking at right now in the markets. We'll also be talking about our technical analysis levels for the NASDAQ, S&P 500, gold, Bitcoin, Tesla, and more. We always know that taxes are the kryptonite of markets. So the question is, are these tax hikes about to cause a major sell-off in May? Stay tuned. So guys, as we always like to do on this channel, let's take a look at a heat map for the S&P 500 from yesterday. And you'll notice straight away that semiconductors were hit pretty hard. Some of the banks were hit pretty hard. Tesla also declined after having a good morning. Everything was down after plans were revealed that, of course, Biden has pledged to, of course, tax the rich in America. So it's long been known that taxes are the kryptonite, of course, for stock markets. And with this new Biden tax that's coming through here, I think the big one that's going to really hit stock markets is going to be the capital gains approach. Basically, it looks like currently in America, people are paying around 20% of capital tax. Now, in this case, it could go up to 39.6, but we're still not exactly sure on more details about this tax. And that's why the stock market hasn't sold up hugely just yet. Before we get into the sectors, before we get into everything else, of course, Intel, one of the big tech announcements came out yesterday, and it was a case of they actually kind of beat earnings to a degree, but they didn't quite meet their core center sales. And it's the same story we saw the other day in Netflix. We had not as much new people loading up and actually signing up for Netflix, but we had actually an earnings beat. So it's a lot of earnings beats coming through, but the core areas are not so good. Snap, on the other hand, did do quite well. Let's now take a look at the indices and have a look at what happened after the Biden summit. You can see the sharp fall off that occurred here when news of the infrastructure bill and of course the tax came out. Everything just a little bit lackluster to what the market would have expected. And it kind of leads into our narrative at the moment as well, which has been that there is a potential sell coming here in May after an incredibly strong April period. Let's have a look now at the sectors. And of course, when that information came out, everything fell, led by XLB, the materials sector. So let's now move across to our earnings calendar. We saw yesterday, of course, as I said, Intel and Snap come out with their announcements. Snap was better than expected. Intel was kind of in line. However, the stock did fall from that. That brings us to a total beats rate of 90%. But it's not just the beats that matter here. It's are the companies growing in the right hyper growth or growth areas. And so far, the tech side has been lackluster. We'll have to see how that holds up next week. We have the bulk of bigger earnings coming in over the next 2 weeks. So we'll really know more about this sell in May concept moving forward very, very, very soon in the markets. Now, what am I talking about from sell in May? Well, if we put two overlays on here, and this is of course was shared in our Discord community, so get into the Discord community, links down below to get into the public one, or you can join the private one here on YouTube or through our website fxevolution.com. But you can see over here on the left hand side we have a carbon copy between the GFC 676 lows and 2237 lows that were caused in 2020 2021. You can see how the market's tracked since then, and then of course we have this point here, which we're a few days past this point here. So effectively, if the market's going to sell off, May is going to be the catalyst around the middle of earnings. And this is what happened last time. We have to pay some heed to this kind of thing, because we've been really trading very similarly to this chart ever since we started recovering from, of course, the pandemic lows. Let's take a look here at the PCC, the put call ratio. And yesterday we actually had that back in the low 0.7s, showing that there were a lot of calls opened during that run. Now, if tomorrow the market goes up again, so the Friday session, what am I going to be saying on the weekend, especially if the PCC comes down again? It looks incredibly likely that Wall Street is actually adding to their hedges, and a whole bunch of retail traders are opening up calls. So that's what they're going to target over the next month. Let's have a look at the dollar index. Dollar index continues to find resistance right around this 91.40. Previous supports acting as resistance here. It's stuck in a range between 91 flat and 91.40. Expect it to probably hover around this area until it breaks out, and if it breaks to the low side with the daily close, then we really are exposing down to potentially 90 for the dollar. And if it breaks to the upside, we move on to the next area, which is probably going to be around 92. So dollar index completely trapped for now in the markets. This dollar index weakness has led to gold being the major breakout. Of course, one of the always well-known stock market hedges. Now, it's not been as good a hedge in recent years. However, the breakout, the double bottom pattern that we have here on the daily is in play. That goes up to around 1825, which you can see here on the left-hand side is amazing support. Look at this support that came through there. Let's now go over to the 4 hour where we were yesterday in the live chat in the session before 1.5 hours before market open, which we'll be doing here for Friday open. And you can see the 4 hour closures were really key. Huge amounts of accumulation wicks, massive rejections coming through on the 4 hour once, and we're getting rejections again on the 4 hour 20 exponential moving average again. You can see volume has been spiking as well throughout this. So if we keep getting a little bit of follow on here through the session, then we should be able to go back up, break through 1800, and notice it stopped just before 1800. So that means that if it goes back up again, it's going to smash through the 1800 level. So really important points here for gold. Silver's going to be moving very similarly. We'll go over to BTC. So Bitcoin closed yesterday below the 50 moving average. Now, this was a very ominous sign. The rest of the coin market actually held really well, but Bitcoin is not in season. And if I had an overlay from 17, you'd actually notice that this is exactly what happened in 2017. We had a little bit stronger in the altcoins comparatively to Bitcoin, and then we had Bitcoin really failing. So this is the support we've got, the support line here at 50,500. You can see how important it is. Trend line from the rise all the way through the year to this point. This is everything for the market right now. It must hold this support. If it doesn't, I've got bad news for Bitcoin holders, because all of a sudden you expose weekly 20. Now, why am I saying the weekly 20 is the point, around 45,000? Well, it lines up perfectly to the previous lows here, the previous supports. Why do I say the 20 weekly as well? Because the 20 weekly was actually where most of the pullbacks during the 2017 run came back to. It also makes sense from a percentage level, because that would bring us top to bottom to around 30%, which is actually a very standard full correction sell-off. 30 to 40% is what happens in cryptocurrencies. So I don't expect it to go 40%, because that's the same thing that happened in 2017. And I think the market is much stronger now. We even saw during that last sell-off and recovery around 30%, and around here 30%. So let's say the market does come down here. It's going to either find support right now where it is, or it's going to come down to around the 45. So I think both these levels, super important for cryptocurrency traders. And of course, whatever this does, the rest of the market will move to a degree, though Ethereum has been a lot stronger recently. Tesla, not much to report here. It kind of closed above 743. It was looking great in the start of the session. Then we had the summit. The summit was no good for the stock market. Previous resistances, especially capital gains, I think that's a big problem here for Tesla. There'd be a lot of rich retail traders that would be looking at the capital gains tax and saying, oh, maybe it's time for me to start scaling out of my order. That's the type of thought process that could happen here due to these tax changes. Previous resistance becoming support, 720 support. Hopefully tomorrow the market bounces. Of course, we have earnings for Tesla coming up on the 26th of April after hours, I believe. And this is so important that the market continues to rally for Tesla. It usually always rallies into these announcements. So we have to have 720 support being found, yes, tomorrow, and then we would love to see it go back up to a 740 plus, and then of course get to around 780 ideally before the announcement. That's usually where you're going to be, around resistance just before an announcement. We'll go over to the QQQ. You can see here on the 4 hours that it's right on support. This is getting worrying, but I'm not looking at the QQQ or the NASDAQ so much for our support levels. In fact, I'm going to switch over to the SPX straight away. And the reason I'm going to do this is because you can see very clearly on the real market where the support is. 4120. Never forget, the S&P 500 support levels mean the most in the markets. 2 hour 50 exponential moving average, 4120. We do not want the market underneath this. If it closes underneath this, it has changed trend on the smaller time frames, 2 hours, 4 hours, etc. What will happen? We'll probably see a sell-off to at least the daily 20. Now, that's not that much more. It's only 40.88. But my concern is that we're going into May. We're going into a time here where the market's got earnings, and a lot of these earnings are coming in with beats, but they're just not meeting the expectations of the markets overall with new acquired users, etc., etc. And especially if tech starts to fail here, that will be a big issue. So 20 moving average is the next level support. We know 41.20 is the area we're looking for. And if the market goes through this, where do we go? Back down to the 4,000 level, if not even further. Based on that chart before, we would be going all the way back down to 37.29, because that's what happened back in 2010. That's the type of fall that actually occurred. It went back down to those March, Feb lows. So sell-offs could be coming here in the market. What do you guys think? Let me know down below. I'm very interested to know what people think about May. Is it going to be a buying month or a selling month in the market? Are you a bull or a bear? Let me know down in the comments below. And of course, as always, please remember to subscribe, hit that like button, and we'll see you today for another market open session. Bye for now, guys.